Welcome, guys. Welcome back to the Insider Outsider podcast. Now, for this video, I want to say thank you very much. We hit 100 subscribers a little while ago, and we're still growing. People are viewing the videos. We really like it. Again, we just wanted this to be a conversation. Today is a special day, Ahmed. Do you know why that is?
Yes, we're going to give you a Kowalski analysis
Yes,
on
but
several topics.
also it's the Remembrance Day. All right, even more important. And so Remembrance Day is my favorite holiday. You could kind of say it's not really a holiday; it's a day for remembrance. And you might be wondering why on such a sad day. Is because I don't see it as sad at all. I see it as a very happy day. I see it as a day to be fruitful for what we have been given. And so I didn't tell Ahmed what I want to tell the whole world online, but there's a reason why I think that people need to be generous towards November 11th, and that's because of the fact that Ahmed, you and me live on lives on the backs of people whose names we will never know. So many people died to get us into the position we are at. Kids, adults, people no older than us, people our age have passed away because they had believed in something bigger. And I think the true bravery, if there was a true definition of bravery, would be a picture of the soldiers that fought for us in World War II, because it's not a brave man, the man who is not afraid. It's the brave man who is a man who is afraid but does it anyway. And man, I tell you, when people are dying on the battlefield and they're still going out there, they're not courageous. They're doing it out of necessity because they're trying to fight an evil. But regardless of whoever did what, remembering every single fallen soldier is a very hard thing to do, but putting it into a day like November 11th really, really puts into perspective that we really should be grateful for the opportunity we were given. And it was not given to us free. This opportunity was earned, died for. And that's why Remembrance Day is my favorite holiday. So Ahmed, yeah, put it back to you. Now I'm gonna eat my fruit. By the
I
way, this is
resonate.
my fruit for the day.
Holy crap.
Yeah. I like
That's
to
a lot of fiber.
man, when you gotta eat so much protein, you gotta eat a lot of fiber.
Well, exactly. That is a nice detail, but I almost want to jump into this conversation on nutrition and benefits of supplements and so on, but
Mm-hmm.
we'll stay on topic because I think there is some do like what Ravinder said about today is a special day, and it just reminds me what he shared. Reminds me of like Attack on Titan, where this guy just says a speech. It's like my soldiers rage,
You're talking about
my soldiers
the
scream out.
speech before they go get destroyed by the
Yeah.
monkey, right?
Yes, but they despite the fact of the they still show up, and that's what our channel's all about. And I think that you guys could just pop up my soldiers rage and hear it. My soldiers scream out. I think it encompasses the narrative that we want to express here. We're very appreciative of the people that have put forth their energy and and despite the fact of being in a state of fear, they act, and that's what we want to push here. This is the narrative that we want to push here, regardless of what situation you're in. You have to come at life with rage, not exactly rage, but like do your due
With
diligence.
gratitude.
Yeah, gratitude, and understand that a lot of these things that are put strain on you are not only they're privileges. Your struggles are privileges, and you must treat them as such. So you got to go. And I really like how Rav worded that.
Thank you, Ahmed. I really do appreciate him. But yeah, it's just something I wanted to share. I wanted to make a video dedicated to Remembrance Day, and so that's something we're going to be doing in the future. But yeah, it's a very important day, and I don't think people give it the recognition because it's very hard to remember when you hear stories about what has happened, but it's very hard to live it. And I just today I was watching up another podcast. I was watching the PBD podcast, and in the PBD podcast, they were talking about somebody's grandma. So pretty much it was just a commentator, I believe, and who's saying my grandma told me that World War II was from when she was 19 to 25, and those are the best years that she was never going to get back. But because of the things that people did, because of the soldiers that went and fought for us, she was able to live from 25 to 70 with the best years of her life. And how can you say it? How can you say it any other way? But yeah. Enough sad talk, because of course we can talk about Remembrance Day as much as we can, because as I mentioned to you, I got a lot of things to say about it. Because there's no chance to be grateful. But we're going to talk about another soldier in a different category, not in warfare, but in finance, and that's Warren Buffett. So today he gave out his Thanksgiving letter that he does every year, and it was a long read, but it was 3 pages, not too long. It was very spacily worded, but he did some very beautiful things, and honestly, I related very well. So he thanked everybody, and I think Warren Buffett. I think a lot of people. I've heard many things about Warren Buffett. For I'm not very a lot of them very well. I want to know what Ahmed's position is on Warren Buffett. I think Ahmed really likes him too. But I've also heard people say, "Oh, he's just a crooked guy. He just knows everything too much about finance. Or he works for the government, sees everything right." But man, he's been doing it right. He's been doing it for a life. His life is something to be studied, something to be remembered. Same with Charlie Munger, his business partner, who definitely helped him build Berkshire Hathaway to the behemoth it is today. You got to think about it. It was the first $1 trillion company. It was the 10th $1 trillion company, I believe, and it was the first $1 trillion company that wasn't in finance or tech. Can you imagine that? It was the only company in the entire world that was not a finance company and a tech company that had reached a $1 trillion valuation. It's insane. And yeah, so in the letter, he was pretty much just saying it. He's gonna start to actually donate a lot of his shares into various charities that his kids run, which is fantastic, right? And he makes sure, apologies, that he mentioned that it's not a dynasty. So he's not trying to give it to his kids. He's trying to give it to the best person in charge, which is Greg Abel. And the entire board looks like at this moment in time, well, definitely Charlie Munger and Warren Buffett both agreed that Greg Abel was the best man for the job. Like he's been working with Berkshire Hathaway for over 30 years. Like the guy knows what he's doing. I'm very excited. And I know a lot of people have a lot of fear in Berkshire Hathaway stock. Like, what are they going to do now? They have $300 billion in cash. What are you going to do? But I truly do think that they're going to wait for some sort of correction, and they're going to buy an S&P 500 like straight. They're going to just, could you imagine if they just bought Pepsi? I'm not saying they're going to buy Pepsi, but if they just bought Pepsi, right? Or if they just bought something, because obviously they like Coca-Cola. But yeah, what if they buy something cash?
Long company, yeah.
Yeah, and the position the company's in is so strong that it's very
How large
hard.
is Pepsi?
Huh?
How much of a market cap is on Pepsi?
Here, let's look right now. I can tell you. All right. Sorry, my keyboard just on the floor because I was eating on
They
my.
owned by. Are
Huh?
they also owned by Nestle? Are they owned by Nestle?
No, Pepsi. Pepsi. I believe Pepsi might own Nestle, but
Is
I'm
it
not
Coke
too.
or there's Coke? I
No,
know
no,
there's a
Nestle's
couple
by itself.
companies.
Nestle's by itself, I believe. Okay, the market cap of this is $198 billion. PepsiCo. So you could buy it cash. You could buy it cash.
Wow.
Yeah. So
Well,
all of Pepsi, all the brands. Yeah,
would,
Nestle is by itself, by the way. That is by itself. But all of the
would you not
brands.
have to use like a back door? You can't just buy that.
No, you can because you could just buy.
Would
Because
it not pump
if
the price?
no, so what happens is they start buying once they own 10% of the share. They can just offer every shareholder a buy, and they just buy the company straight. That's what happens to a lot of private companies, right? So if outside investors,
Acquisition? Yeah, I see.
uh because if
Acquisition,
if
that's
the
what you're
stock
speaking
price
of.
right now is 145, they offer 147.
Rev, I have a lot of questions.
Mm-hmm.
Is it like private equity acquisition? Is that what you're highlighting, the 10% thing? Or
Yeah, well, that's what they did to Geico. Like there's a lot of companies that Berkshire Hathaway
interesting.
owns. Like here, let me just
Yeah.
pull out their portfolio for you, just so you're aware of this too.
Yeah. Geico is an insurance company from what
Yes,
I.
it's an insurance
Yeah.
company. That's a big player.
Well, it's. Yeah, I understand that you want to pull the portfolio out, but I'm pretty sure you've watched them very closely and you can give us a generalization.
Like they own a lot of big number brands, right? So here,
Yeah,
one second. It's
insurance.
yeah. I'm just looking at it. Just gonna take 1 second.
Yeah, I think
Companies.
Brad watches this a lot closer than I do,
Yeah,
but
well,
I
I
do
own I,
acknowledge.
I own a lot of Berkshire Hathaway, so I love them.
Yeah,
So Geico, so they own Berkshire Hathaway Energy Company. There's this railroad company they own a big portion of. It's called BNSF. These are all private companies, so they own. They also own Dairy Queen. So all Dairy Queen, Fruit of the Loom, Benjamin Moore, if you know any of that, Pampered Chef. What is it? They own all of that straight. They also own Precision car parts, so they own a bunch of car parts places.
I think there's some explanation that
You
would
know
be valued by the
Duracell? You
judge.
know Duracell? The battery company? They
Yeah,
own
that's
it straight.
better.
Yeah, they own it straight. That's all owned by them.
That's an impressive portfolio.
Yeah.
Um, what if you were to describe the statistical significance of private equity in comparison to S&P 500, publicly traded versus privately traded companies. Um, this is something, Rav, I feel like you're highlighting,
Hmm.
inadvertently, but like,
The
Just give us the numbers that you've seen, because you're a accredited investor, and I think this is definitely a place where people might want to have this answered.
private equity usually grows a lot faster than public, but
Yeah.
raising money is so much easier in public markets. The problem is do you know there's
Mhm.
more companies in the USA that make over 250 million USD a year that are private than public?
Interesting.
Yeah, crazy to think. That's a crazy stat.
Not, but that doesn't reflect on the S&P 500 whatsoever.
No, it doesn't because
Does
private
it?
companies don't.
That's interesting because yeah, that's
Thank
quite
you.
interesting.
Yeah, because private companies don't reflect on S&P 500. S&P 500 is only publicly traded companies, and so
Yeah.
I want
Yeah.
people to know this. Stock was it?
But there's this notion, there's a logical interpretation of S&P 500 being directly interpreted as the success of the U.S. And if you were to give us a quantitative understanding, like how much of private equity is not reflected in that thesis? What do I mean? I think that private equity within America should also have the same effect that the S&P public, the
Here,
success of the public market
I'm gonna tell you this. I
should
don't know the
represent
exact
America's
number. I
success.
don't know the
You know what I'm
exact.
saying?
Yeah, I know. I don't know the exact number, but I'm gonna tell you something crazy fact. There are more companies that were listed in the 1950s on the New York Stock Exchange than there are companies today, and not by a little, by like tenfold. So there's like 90% less companies listed on the S&P 500.
But
Uh,
that doesn't represent a growth factor. That's a time.
but
Yeah, but like how
uh,
much more has that
usually
grown?
private
That's
equity
interesting.
can usually there's a lot of ways to make money in private equity. So like if you ever look at like what in finance, everybody always talks about in finance what like they make so much money, hundreds of millions, but
I
who
think it's
actually
based
makes
off
yeah,
suspicious activities, debt leveraging debt, and so on.
but
Is that what
who
you're going to go
actually
into?
exactly, but who actually makes the money? The thing is people who do private equity version of finances make money because they're able to
Well, that
fund deals.
acquire,
Yeah,
right?
but if you ever heard of have you ever heard of Cargill? I know you haven't heard of this company. Have you ever heard of Cargill?
Never.
Okay, you're about to go crazy, bro. You're about to go crazy. Let me explain to you Cargill. Okay, Cargill is a food company. It's the biggest food company in the world. Let me tell you.
Never
Guess
heard
how?
of this name.
Never heard of
How
its
can I
name?
have not?
It's in the USA.
It's bigger than
It,
McDonald's.
way bigger.
Bigger
Okay,
than McDonald's by a
bro,
vector of
bro.
how and what.
Let me tell you something. Okay, okay. Its revenue. This is the biggest private company. It's one of the top five biggest private companies, right behind SpaceX stuff. They made $160 billion in 2024.
What the hell?
And it's
Never heard of this.
private. It's private. It's only owned by very few people. So they make a lot of the food that you eat. They're the ones who do it. They're the main manufacturers. So that's one of the biggest companies in the world, right? So what I want people to understand is this:
140 billion.
160 billion of revenue. That's crazy.
60 billion.
So the way that Berkshire Hathaway model works is they either buy major shareholders of stocks, so they buy stocks as well. You can think
Mm-hmm.
about Apple. You can think about Bank of America, like or American Express. They're big owners of these guys. But then they also buy companies straight out cash, and they're just literally cash piles that sit there. Insurance is one of the biggest gains, and that's why Berkshire Hathaway is one of the biggest holders. Because literally all it is a holding company. When you buy Berkshire Hathaway, you're just buying the rights to the holding company, and that's all that Berkshire
Insurance.
Hathaway is.
When you suggest insurance, is that a vague expression? Because
No,
um,
insurance is probably one of their
you- there's-
biggest because Geico makes a
are
lot of
there
money.
are there like for example, there's a way that you could kind of launder money, from what I understand. I'm not promoting this or anything, but a lot of these YouTube channels that I've watched prior talk about trusts, insurance policies, life insurance. Is that what you're talking about? Is it Geico
Geico
part of that?
Geico does deal with that, but they deal more with auto and home insurance. Like it's literally just an insurance company. Think of it just like a regular
What's
insurance.
what's the tools? Okay, how is this? Because I know you could leverage different policies differently. Some people pull out their life insurance policy.
Yeah,
I
yeah,
don't know
yeah.
how
So
how's
there
home
are
insurance.
ways. So we'll go into dive deep into this episode talking about life insurance and how you can get infinity life. It's called infinity life insurance. That is what you're referring to when you're able to borrow from your life insurance when you're alive. That's what you're referring to, right? So you
Yeah,
can,
yeah.
yeah. I know a lot about it. So there's Infinity Life Insurance. There's a couple of other ones, right? And they use this as it's called infinity banking. So if you search up infinity banking, it's the idea of you borrowing money from your life insurance that's supposed to be paid out after you're dead, but you can borrow it while the life insurance increases in value in the stock market as well. One big person who used to do this was Rockefeller. So it's one of a lot of people base it off because of that, right? Now there are tax benefits, like there are tools to it. I'll show it to you because you need to for the viewer to understand this. You need some diagrams so you can really understand kind of how it goes. But it's people
Nuance.
that circle
It's very
financing.
nuanced. Yeah.
Exactly. But one thing I want people to understand is how rich you would be if you invested with Warren Buffett. So Warren Buffett had a compounding CAGR. All
Back
right,
to
that
this.
just
Yeah.
means accumulated compound. So he had a CAGR of 20% a year. That is double the S&P 500. And just for example, in the 19 let's just say for example in the 1970s you decide to invest into Warren Buffett. Okay, in the 1970s if you put $10,000 in, you never touch that money again. Today you'd be sitting at a cash pile of $250 million cash.
The power of compound, because of the power of
Power of
compound.
compounding at 20%. It's insane returns. Now, again, Berkshire Hathaway is a huge company. Can it still compound at 20% a year? I have no idea, right? It gets more tricky the bigger you get.
You're
But
stepping into game theory. Yeah.
yeah, exactly. But the thing is, I think Greg Abel is a fantastic CEO. I think he's going to do great. A lot of people don't actually know, but he's already a CEO of the entire energy division of Berkshire Hathaway. So he already has experience leading. And again, he's been working directly with Warren Buffett and Charlie Munger for
He's
decades.
the one that's going to take it off, right? His
Exactly.
hands.
Yeah, I doubt that like Berkshire Hathaway, like people also understand is Warren Buffett may not have like equity, like he's not going to have exact equity stake in Berkshire. He's still going to help around, but I think people don't understand is he's still giving his equity away to his kids. He in no world does he want his kids to lose all the money. He doesn't care about what happens to stock. He cares about what happens to stock. That's why he put Greg Abel in charge. Mm-hmm.
The thing is, money, and the love for the trade itself, trading. I feel like are they're two different things, and I feel like when you build something up for so long, you don't want to just. It's not about where the money ends up or where it goes or who the inheritance policy. It's more about preserving what you've built beyond the material world. It's like a what's it called? I have another buddy who's obsessed with this too, and he's hyper successful from what I can discern. He was in investment banking, funny enough, but he wants like a memory. He wants to leave a legacy. A legacy is the word. It's more about legacy than it is the material sense of preserving capital, giving it to kid. Right? That's what I see, and I think it was bittersweet. The message was bittersweet goodbye, because obviously when you dominate the financial markets like he did, it's a ridiculous return, and in comparison to the average trader, that's something to understand and unpack. Ravi could go into that.
I completely agree, man. He is incredible, and he's known as the best investor alive, right? And he's
Yeah,
known as the best investor. Period. Actually, it doesn't matter if it's alive or not. And so he's incredibly rich, incredibly wealthy, and he's incredibly does.
would you
He's
say
just
he's
done a lot of fantastic.
better than James Parsons?
He Jim Simmons, Jim Simmons, you mean, right?
I keep mixing those
Yeah,
names
yeah, yeah,
up.
no worries. Jim Simmons has a higher rate of return, but he has
Emerson, yes.
substantially lower wealth than Berkshire than Warren Buffett.
Yeah, but when you're assessing someone on the scale, or when you have to
Yeah,
be
but
more
it's
qualitative,
different investors, right?
you're being
Because
quantitative.
Jim Simmons is
You're
a
being,
quant
being very
investors.
quant.
Yeah, because he
We're
does
talking
quant, right?
percentages rather
Because
than numbers, right?
but here's the thing. So 60%
Traditional. Okay, I'd say
grow.
he's in
Yeah,
another category. It's like the Grand Prix versus cycling.
yeah. But
And when it comes to
you could say it like
traditional
that.
investing, you could say Warren Buffett's better. Is that what you're suggesting?
I'll kind of, but let me explain to you because I'll get your opinion on this. So Jim Simmons uses AI models to learn to make very quick trades in milliseconds, and they usually keep trades from 1 day to like 6 days max. They don't hold trades for long periods of time. So they don't
Yeah,
care about the actual. And he's mentioned this.
investment narrative.
They don't actually care about what the company does.
Yeah,
They don't care. They don't care.
yeah, yeah.
Versus Warren Buffett, which completely says the opposite. So there's some interviews where Warren Buffett talks about quant investing because people ask him, "Oh, are you guys gonna make a quant investment firm as well? Like, why wouldn't
Yeah,
you when Jim Simmons is making 60% ROI, right?"
yeah, yeah. Interesting.
But his answer was no, because his answer was you can only do that to a certain scale, and you can't scale it past that. Which is true because Jim Simmons was never because that I believe he just passed away last year, but he was never in his history. They had to dial back, as we mentioned, because they used to
Yeah,
do
yeah.
used to mess up the category too much, and they were losing money. So they realize the best way for them to work is by actually having less money. The less money, so and like less money, I'm talking about like 50 to 100 billion. I'm not talking about like like less money, but like if quantum investing worked
Yeah.
forever, then he'd be richer than Warren Buffett. But he's not even close. And I'm literally talking about the difference between 200 billion to like 250 billion to 20 billion. Like that's Jim Simmons 20 billion versus Warren Buffett's 200 billion.
I'm gonna give you my opinion.
Yeah,
I think
but
you've
but
highlighted a lot of things.
one
Yeah.
last thing I want to exit. Warren Buffett is known as the best value investor. So I'll
So
restate what I said.
you see Warren Buffett is better than in some ways, or what is it?
I I, okay. If we didn't have computers and you had to judge a book based on a book, right? If you see a company, there is nobody on this earth who can read a company better than Warren Buffett. Warren Buffett
Mhm.
only bought companies that he literally saw. There was three foundations that he needed. He needed a competitive advantage. All right. So what that means is he needs to make sure that why am I buying Coca Cola? It's because nobody says I want soda. Like, do you have Coke? So Coca Cola. Do you want Coca Cola? You buy something that has a competitive advantage. All right. Then the second thing he liked is he made sure debt levels were good. He made sure they could actually sustain himself. Right. And the third thing he was looking at was good management. So like he looked at he was the best at looking at fundamentals because that guy literally was holding for decades. Right. Imagine you putting your bet in today. Like, you know how people go gambling. Ahmed, if I told you you're going to place exactly which team member is going to be on exactly which team on the Lakers 10 years from now, none of us are going to get it right. Warren Buffett was the guy getting it right, right? He was the future of you. He was thinking way ahead of his time. But quant investing, on the other hand, is literally no fundamentals, nothing. It's literally just using mental algebra to make profit. It's literally just that. So I think technology wise, Warren Buffett gets destroyed by quant investing, right? But I do think that Warren Buffett was smart enough that if quant investing was something that was sustainable, or there was a way to do quant investing on a larger scale, he would have done it. But I don't think he could have.
I think this conversation is interesting, and I definitely enjoyed your perspective on it. But I would like to share what I think. And the best analogy I could think of is Leonardo da Vinci versus I forget this other artist's name, but he was an artist during the same time that Leonardo da Vinci was an artist.
Michelangelo?
Michelangelo. Yeah, I think that it's not an exact replica, analogy wise. That these two people compared to these two people, um, James and Warren versus Michelangelo and Leonardo da Vinci.
Jim Simmons. Jim
But I think
Simmons.
Jim Simmons. I think, although I don't know his name as good as I should, he actually is more of a visionary than Warren. I'll articulate why. Because the reason, the bottleneck that he experienced, what he did was he got 25 PhDs in one room, mathematics PhDs, and that's what they did. From the numbers, percent wise, he's way above Berkshire Hathaway's return on within a time constraint. Obviously, the reasoning behind him breaking, he basically broke the game. He was so well at the game, he broke the game, and he's not to blame. And when you're comparing Warren versus 66% every year, I think that he was such a visionary. His capacity to trade, obviously, he's gone, and his success is measured prior to AI advancement and shifts in the market. There's a complete different atmosphere when it came to when the New York Stock Exchange was like set up. People that were right there had insider information. They traded differently. There was less bots. There's less saturation, less interest, and it was less competitive, and so it was easier to succeed. Nowadays, there's a lot more nuance that you need to understand prior to even stepping onto the thing. But when you play the comparison game, I think someone that is his bottleneck was the size of the market he was participating. Basically, in theory, if the market was large enough, and I think the market will get larger due to AI advancement and solutions on liquidity. The bottleneck, the investment environment requires liquidity, and I think that crypto will help print way more money, and transactions will work way quicker. So the size, from because things are the multi-vector problem of how big can the stock market be, value-wise, not inflated value, dollar value. You have to take into consideration the liquidity, how long the bank is open for, when does trading stop. If these things were dialed down even sharper and sharper, you'd have a larger market. Therefore, this guy that broke the game would succeed in the future because the future represents the larger market, right? The bigger, where he wouldn't hit the barrier, he wouldn't hit the roof right away. He just visionaries, under what I understand as a definition, is someone that can see so far into the future that they're looked at as crazy. And the reason I bring up Leonardo da Vinci and versus Michelangelo is because Michelangelo during his time was seen as amazing, and Leonardo da Vinci never finished his work. But when he went to work, he considered like lighting, physics. He was very very perceptive to the point at which people made quick judgments. But his art was only found 200 years later. Like people started to understand what the fuck he was doing 200 years after he left the planet. And I think similarly, I'm not playing down Warren Buffett. Michelangelo is a special guy. Warren Buffett's a visionary. I just think that empirically, 66%, and there
The,
are within within let's say basketball.
the only thing
Yeah,
I disagree with you, because
what
you are making good, pretty much you are making
argument?
good points. But the one thing I
Mhm.
disagree with you, and this is the biggest thing I disagree with you, is although it is agreed, so it is the size of the market, right? Like, how do you measure the person who has conquered the entire land? Only by the box that the land is conquered in, right? The man who can conquer the entire island is only limited to the size of the island, right? So I understand what you're saying. So sorry, got a burp. But
Mhm.
the disagreement part that I have is
Well,
with it's like the idea of day trading. All right, so you day trade every single day, which is literally what Jim Simmons is doing, but day trading in a better way.
trade
And again,
trading
he was doing this
versus
all
long-term
before
investment.
ChatGPT. He was doing this way before
Yeah,
he was doing this in the 1980s before anyone knew what a fuck AI was. Okay, and so the issue with that is you need to consistently keep doing it to make money. That's the problem with Jim Simmons. But with Warren Buffett's value investing, it's a sit and watch mentality. It's so you do it once, you do it right. Versus Jim Simmons, which is you're not just daily, you have to execute 100, 1,000, a million trades a day or 2 days or 3 days in order for you to make your money. Versus somebody who can just sit back, literally drink Coca Cola, and they watch their share price go. It's absolutely
so you're
ridiculous.
saying from an energy allocation perspective,
Exactly, because what's
but
easier, right?
that's not a good argument. I'm not gonna lie to you.
But I think it's a very good argument because I think about it like
What's
this.
if you suggest that what Warren Buffett's doing is easier, then he's not going after such a big goal, is he?
But here's the thing.
I'm not playing down Warren
No,
Buffett, but
no,
like
no. But I have a
you
question for you.
have to
I have a
orient
question for you. I have a question for you.
orient it in
If
a
you if
compelling
you
way.
if you cut your lawn grass with a scissor, you can cut a lot of grass exactly how you want it. Or you can use a lawnmower that's 100 times the size of one scissor, and you can cut it very fast. All right. That
You're talking in an efficiency comparison.
but I'm talking about it in a comparison of what is the long term goal with investing is you want to own your companies and you want companies that produce great shareholder value for you. And eventually, like look at Warren Buffett, he was buying companies that are going to continuously pay him and his kids and his kids and his kids. Jim Simmons technology only works as long as the technology is valid. Now, here's a question for you: what if the market cap for the total S&P grew and now he can grow the amount that he does? But what if quantum investing doesn't work? What happens when everybody has AGI computers that can do quantum investing at the same time?
I could articulate the same argument with value investing.
But you can't because people have
Yeah, you
tried.
can. 'Cause
No,
artificial
but here's
intelligence
the question:
shown,
how?
according to you, is 99% better at driving cars, and therefore,
But
the
here's
future
the
of
question.
AI
Here's the
will
question. Here's
only.
the question. Here's the question. Here's the question that I have. Okay, Jim Simmons clearly his AI was able to do what he wanted it to do. All right, at this, but
It's not really.
no AI in the entire world can repeat Warren Buffett's technology at this moment in time. No one has.
It can. It
It
really
can.
can.
It can. I have a question. I have a question.
It is.
Which S&P, which stock, which ETF that's been digitalized? Which trader has traded for over 30% for the last 6 years? No one. Not Warren Buffett. The only one who
Yeah, but
comes even close.
66% a year is double,
Yes, but again, we're going back to the
more than double.
no, but
6% over
you're
the double.
arguing no, but what you just said, I'm not arguing based on the points of what's the actual return. I'm asking you which investor was a value investor who had AI or anything at this age in time has got a 20% ROI every year. Not a
So
single
you're
one.
suggesting
Other than
you're
who's that?
suggesting
Other than that
playing
one dude.
playing by the rules is a more noble way, and having the more
No,
human.
there's no rules to it. But what I'm trying to say is,
It is exactly.
Ahmed,
And so
Ahmed,
who,
if you go
when
on
it comes to
vacation,
judging,
no, but Ahmed,
when it comes to
if you wait, let's listen to this. If you go on vacation and you don't do your work, you get nothing. You don't get paid for it. With
yeah,
Warren Buffett's methodology, it doesn't matter if you hold for a year or a decade. He only buys for
I
holding for
think
decades.
the greater the responsibility, the more um, higher quality. And you're showing me he has less responsibility. He's successful, yeah. There's no comparison between me or average person. But when you're interpreting like
But
metal
Jim
against
Simmons
metal,
and Warren Buffett have been doing the same time. The
did
only
Warren Buffett ever reach? Did Warren Buffett ever reach anything in correlation to breaking the whole stock market?
But
Taking
okay,
too
okay,
much
that's
money.
actually a bad analogy because I could just let me tell you where you messed up. You just messed up. In
Yeah.
real life, we have the real life example. Warren Buffett has destroyed Jim Simmons in the amount of wealth they've created. Destroyed.
No, no, but what's the goal?
If you talk about market
What's the
cap,
goal, right?
no, yeah,
Yeah.
60. You're talking about 66% return. The only thing you're talking about is the return. If you talk about the market was double, he could have done double. Guess what? Warren Buffett could have also done double. Who was to say he wouldn't be at $400 billion and your boy would be stuck at $40 billion? I'm not
The thing is,
saying.
there's only a theory.
Well, it's not theory. It's the truth. We can
It is because
go look at both their
you need to
networks. Go
hear
look.
what he did for 66%.
Yes, but
It's just on
sixty.
a graph.
But again,
On a graph.
what Ahmed, this is what you're not understanding. 66% on $1 is $1.66. 20%
You're
on
thinking
$1,000
you're,
is $1,200.
you're thinking on a Machiavelli context. I'm thinking on a 200 years in the future context.
But again,
And when it comes to the 100 year, the short term, the small lens, you're
you're
right, but I'm
all
right on the long one.
no.
I'm
Even in
I'm
the
right on
long
the
run,
long shot.
even in the long run, you're
No,
lost because
not
you're
true.
still always there's always going to
Not
be a
true.
cap. There's always going to be a cap with quant investing. That's what's been proven up to this point in time. So unless
Not
something
true. You sound
fundamentally
like the
changes,
teachers. You sound like teachers that said AI will never be intelligent.
no,
And
Ahmed, I saying the complete wrong.
algorithms, algorithms.
That's the complete opposite analogy. If quant investing, the
It
way
is,
that it's understood and the way it's done, Jim Simmons again has been doing this for 50 years, right? So you can't just say
mm,
what he's been doing is wrong because there's a way to do it the other way until there is a proven way to do
no,
it the other way. But what I'm saying to you is
no.
there's always a cap. So for example, the cap will always be there. Unlike Warren Buffett, there is no cap. There is no cap.
No,
He,
there won't be.
there's a difference between $1 trillion business that
What
you have created versus somebody who hasn't even come close to $1 trillion
we're
business.
talking about a future reality
Yeah,
where the
but
market's
there's
larger.
always a cap. There's always a
66
cap.
will
For
always be
example,
bigger
if
than
it's
30 or
$5 trillion or $100 trillion,
66% with compound interest. 66% is
but they
profoundly large.
can't compound
The
66%. It's
bottleneck.
not compound. See, look, this is where you're mistaken. It's not compounding. You can't compound 66%. He didn't
Well, the
compound
Warren
six.
Buffett was he compounding
Yes,
30%?
yes, he was. Well, Warren Buffett was compounding 20%. Here's a mistake. See, there is a mistake.
20%.
We're talking about Jim Simmons compounding. He never
Okay, what are the
compounded.
numbers then?
He
What are the numbers then?
so here's the reason why it's not compounding. You have to understand why they're not compounding. When you
It's a
get
yearly
60
basis.
when
I'm
you get
just saying basis.
66%, you have to take that
Hmm.
out of the stock market. If let's say you started with $1,000 and now your
Yeah,
stock market grew to 1666. You can't keep that
yeah, yeah.
money in there. You have to take that money out. You again start compounding at 1,000. You don't go to 66 because remember it gets too big. It doesn't make you can't do it. That's the whole issue of why it can't grow. Think about it. He's only at $20 billion. There's a reason why he couldn't get the net worth over and over that because you're not compounding. Interest at 66 is different than compounding at 66. Huge difference.
I think within within a 100 meter, 200 meter race,
Mm-hmm.
100 year, 200 year race, um, within the current framework, Warren Buffett beats the 100 meter race.
Mm-hmm.
But if you were to give a 200 meter race, I genuinely think that the algo would beat Warren.
I
It
don't
just
think so.
makes sense.
I understand where you're talking about math wise, but again, you can't compound it. There will be okay. Let's just say, for example, the 66 will
Vector of
eventually
truth.
the 60.
Vector of
I
truth.
know the 66 will eventually beat Warren Buffett, but it's going to be capped at one place or another. It's capped. It can't keep going on forever. It's capped right now. It's capped tomorrow. It's
Okay.
going to be capped 10 years from now. But Warren
What
Buffett is
percentage?
not capped.
Yeah. So
Oh, so
obviously,
66% on zero is still zero, right? But
is there
20%
quant trading on
compounding.
the same level as investment? So we'd have to do a comparative analysis between the success of quant trading
Mhm,
compared to standard investing, like
mhm.
the fundamental investing. Which one has shown the best returns? Not only from Warren Buffett and just as a fundamental.
Yeah. You made a lot of money with contract. Again, there's a limit to it, right?
Who's
The-
richer? Who's richer?
Warren Buffett,
Who
way more,
represents?
Warren Buffett, he's
Who
way richer.
represents? We're talking not on an individual. We're talking now on the collective. Within quant trading, the successful quant traders versus value investing.
Value
Who
investors,
dominates this?
value investors. There's no
They
other
beat them.
quant trader that's reached anywhere near Jim Simmons. They're
Do
barely
you think
hitting.
that
They're barely beating the
do
market.
you think that value investing will continue to compete in the future compared
Yes,
to?
I think
I disagree.
you can always find a deal, man. You can always find a deal. Okay, then
I
here's the
completely.
question. I just did this with
I think
Meta. Here's the question. Okay, I know what you're about to say. You AI can
it's
be
just straightforward. Yeah,
no, but
it's true.
I can tell you why it's wrong. If you put a
It's valid.
stupid, if you okay, here's a question. Here's a question. Okay, if you put a stupid guy in charge of a really really good business, what happens to the business?
Nice.
Yes, until guess what? Shareholders kick him out. So
Yeah.
I'm just saying this for Meta. I'm going to use Meta analysis. I'm going to use a real analogy. Mark Zuckerberg turned his focus from ads and AI, and what did he start doing? Metaverse. He started doing
Yeah.
something that nobody had any interest in. What happened? The stock price went from 300 to 400 USD down to less than 100 USD. At that moment in time, the value investors came in because the analogy said Facebook is getting destroyed. Facebook is dying. TikTok is destroying it. They're getting destroyed from the inside because they're spending multiple hundreds of billions of dollars on a metaverse that nobody wants. Because at that moment in time, the management was doing the wrong thing. Then what happened? They pivoted. All right, a computer cannot calculate the pivot because that's the human judgment.
You're
That's
talking
what
about
Mark Zuckerberg did.
contemporary future of AI.
Of course,
As I've said earlier,
but
the
you can
professionals, the
also
ones that
say
are in the
you can
space,
also say future
are
AI
true
just
experts.
fixes everything, and now you have nobody has any money. You can also say that we can't keep judging
Yeah.
based on future. We have to talk about what is present here today.
My statements are in line with Elon Musk's statements. I think Elon Musk's a visionary, and if I'm in line with what he's saying, I think it's a better argument than yours, Drive. I will say that because
I
there's
have
a
to
conversation.
respectfully disagree. I think today was
Yeah,
not a
I
good
know.
argument for you.
You're playing an uphill battle. You're comparing a human to not AGI, ASI, super intelligent,
Remember
super
yesterday,
intelligent.
we were having a conversation about cars, correct?
Seriously,
And we
I
were talking.
genuinely
We
think
were, but wait.
that whatever strategy,
Mhm.
seriously, whatever strategy that you have as a human being, because you're comparing ASI to human, are you disagree with the? Is this a reflection of your argument? You think the humans
No,
can outpace ASI?
let me ask you a question.
Seriously,
Does
I'm dead
does
serious.
AI is a yes or no answer, zeros and ones, correct?
No,
They look
quantum
for
computing,
they look for.
quantum
I have a question. I have a question. Is the AI going to be programmed
binary.
to take the less risky option or take the more risky option?
Huh?
Does the AI? Let me ask you the question. Does the
Mhm.
AI take the more risky option or the less risky option?
So here's the truth of what you just suggested to me. You have a yes or no answer, which is a binary way of
Yes.
thinking.
hmm
AI thinks more than zeros and ones. It thinks
No, that's
in
you're talking
quantum.
about. You're
It's a
talking about
quantum
advanced
computing.
AI.
So
But I'm
your answer is predicated on very weak probability. My answer is predicated on quantum computing, which is higher.
okay.
It's a higher tier of.
I understand what
It
quantum
really is.
computing. I understand quantum computing, but that's not what I'm asking you.
You could try and
What I'm
squeeze.
what I'm asking you,
You could try an
I'm
argument on a. You could
unless
try
you
an
know
argument
the
on a basis
future,
of yes or no.
Ahmed, unless you know the future, you can't know if something is the correct answer today. You physically can't know unless you can go into the future. Now we're not talking about we're gonna go in the future and figure out
It's Yeah, our
yeah,
whole
but
conversation is in the theoretical.
yes, but
Yeah,
you're making it a theoretical. Our whole conversation
yeah,
was what's a
no.
better perspective on value investing or quantum investing. But here's the
No,
thing I'm trying to tell you.
who's a
But
more profound?
yeah,
Who's a more profound?
but
And what do you
no,
what's your
this
measuring?
here.
Within
Listen to what
what
I'm saying. Wait, you keep
variable?
cutting me off. You're not even listening to the full thing. You gotta listen to the whole thing. Okay, so listen. Any computer can still make the same risk, same risk, and they can take the same analysis, but it can have a completely different outcome. AGI is just another human brain now into a computer brain. So now it might be smarter, but it can still not do the right decision. Do you know how many stupid people who you're smarter than, who have so much more money than you, because they put all their shit into Dogecoin, or they put it into Kakro
Mhm.
coin, or they
Yeah,
put it into
yeah,
Shiba Inu? No computer
yeah.
would have done that. Nobody could have known that Elon Musk is going to tweet out Kakro. No one's going to
You're
know this.
highlighting luck. You're highlighting
Yes,
luck.
that's what I'm saying. A computer can't judge. A computer can't judge that. You don't know if Mark Zuckerberg ever pivoted off of the metaverse. If he did it, Facebook stock price would be at £20, 20 Canadian or 20 USD. Sorry.
Yeah,
Instead,
yeah.
because he rebounded, and I was buying because I was believing that this stupidity is going to stop. Not stupidity, but it was going to pivot more towards the ads, which I love the ads. I love the ad business. He went from 99 USD to 700 USD. Do you know I have not met a single other investor who was buying at that much of a dip that I
You
was?
know what you're highlighting?
Mhm.
You're highlighting a scenario where luck is actually
But it's value investing. It was a
hyper.
risk. It was a risk calculated decision. My risk thing was Facebook ad business is so powerful that even
Yeah,
though they're making stupid management decisions today, that they're going to snap out of it because Facebook's ad business generates hundreds of billions of dollars a year. It literally does. It is one of the best. If you ask anybody where they market, they'll say Facebook ads. That's literally the best marketing tool. It's better than Google ads.
yeah.
But again, a computer is going to make the best risk calculated decision. So if you're doing quant investing, guess what? Here's another argument that quant investing doesn't fundamentally care anything about the actual underlying investment. It's not looking at, oh, what's Mark Zuckerberg saying? No, it's true. Go look at Jim Simmons things. He says it himself.
Yeah,
They don't
he
care.
doesn't care.
They don't care about what the name is. They don't care about what it does. They don't care about if it sells anything. They're looking at not fundamentals. They're looking at mathematics. So a mathematics, when you see something falling from 300 USD to 90 USD, you're not going to be chasing it. You're going to be chasing the stuff that has more guaranteed return, which is what you're doing in quant investing. In value investing, you see that, hey, there's a problem here. The problem is the management. The business is very good. The management is very shit. So I'm going to be buying because I believe that the management's going to turn it around. In quant
Listen,
investing, you're not doing
I'm
that.
not bashing either. Both of them are forms of success. I think one is more resilient than the other. The reason being is value investing is a philosophy and it's not empirical. And quant trading is an empiricism.
I can agree
I
to
will,
that. I can agree to that.
I will never choose the philosopher over a math over someone who's.
Nobody in history, no computer in
One of the
history.
worst
At
examples. I don't want to bash this,
yeah,
but psychologists don't look at the tissue that they don't look at the brain like another doctor.
yeah.
Heart surgeons check your heart. Psychologists don't. And the empiricism is what's missing.
I'll tell you something, Ahmed.
All I'm saying is empiricism is, I think, the when it comes to intelligence,
Mhm.
human intelligence is not comparable to a
No, and I agree
probabilistic
with that. Like
quantification.
me and you we definitely know that human intelligence is going to lack compared to AI. We've made it that way. But what I'm telling you is
Imagine you create a large language model
uh
that can understand every single trade,
hmm
have all the data on Warren Buffett, why he did what he did,
yes.
and you let that play infinitely.
hmm
You let that play infinitely.
hmm But
This
that's
a
value
concept of
investing.
future time.
If they based off Warren Buffett as value investing, it's not quant
Yeah,
investing. We're
you
talking
know
about
what?
what's better
You know what
versus
they're gonna
quant
do.
versus value. Yeah.
You know what they're gonna do. I'm saying quant investing is not limited to what we have today. Quant
No,
investing is
Ahmed, I understand your argument. The problem is you keep mixing up two things. You keep trying to fight me on what's going to be a better investment. No one in history, quant investing has been here for 50 years. No quant investor in history has had an upside return greater than the underlying asset. For example, Warren Buffett has beat every quant investor. So you can't
like
say,
I told you.
no, I understand that it's a lack of market
Like I
that you're
told,
saying,
like I
but it's
told
going to
you.
be the
I know
same
what you're
way.
suggesting. I know exactly what you're suggesting.
hmm
But what you're suggesting is that the early stock market
hmm
where you had people with insider information,
Yes.
there were value
Yes.
investors inside
Yes.
there.
Yes.
They were successful up until a point.
No,
You know
but
until what point?
at what point?
Until the algo traders, the quant-based traders came in.
hmm
They absolutely dried up the well. What I'm trying to tell you is the future is very clearly going to be artificial superintelligence. And
Yeah,
if
but me and you never
whoever
disagree
gets,
with that.
whichever person with consciousness,
Uh
AI
huh.
doesn't have consciousness,
Uh huh.
is using the tool will outpace Warren
Here,
Buffett any day of the week.
I'll tell you this right
Any
now.
day of the
I'll
week.
tell you this right
Any
now.
day of the week. You're
Nobody
telling
makes a
me that
bad
an
play.
archer, you're telling me that a manual archer
Uh
is
huh.
going to be more accurate than a robot probabilistic mathematical
Again,
empiricism.
there's a
No way.
mathematical way there, but you're not thinking about mathematics
There is a
in the
math. There
form.
is a math, but it's a humanly discernible
I have a
math.
question.
You know
Here's
what
the
that
question.
means?
Here's the question.
What is the
Why does
magnitude?
the best
Okay,
algorithms today still fundamentally still lose in chess? Majority of them win 99% of the time. Why do they lose that 1% of the time? Why is it
because they're
not a
not quantum
guaranteed
computing.
win?
They're not reflections of quantum computing. They're binary,
No,
and that's what you suggested
even
earlier.
quantum computing is going to be happening because the thing
You
is,
know, quant trading has to have probabilistic, and probability
yes,
is far
Ahmed,
beyond.
Ahmed, listen. You are hype. You keep thinking that no, AI cannot do wrong. Value investing looks for something that's defaulted. something that has intrinsic value, but you can't see it. Quantum trading does not look at fundamentals. I'm not telling you that quantum trading is not going to be a way of the future. I'm not telling you that
Let me defend it.
what I'm telling you is I have proven record that quant
What if I
trading
tell you?
has never ever beat outside investing, because quant trading is limited to the market cap of the position. But
I know.
regular value investing is not. It's not limited.
Yeah. It's not limited within the current environment.
But
100%.
again, even if everything goes double, even if everything goes triple, that still puts
Leonardo
even
da
more
Vinci-
value for the value investor.
Leonardo da Vinci was never recognized as the better artist up
But
until time.
I understand. You're saying quantum investing is going to do
Well,
this and this, but
I
that's
think that you're
but if
falling in line
if
with
everybody can
underestimating
quant invest,
technological
here's the
advancement.
question.
Period.
Here's the question that you don't even understand. If everybody can quant invest, quantum investing doesn't work.
Exactly. I told you that one person that ends up with a supercomputer, super AI, that Elon Musk will have the ultimate advantage.
Yeah, but by that point, if you're that intelligent, you solve all the problems. Nobody needs any currency anyway. All right, because everything we said is pointless
And
regardless.
Who talks about this? Elon Musk?
Okay, can you agree?
What's that
Can
called?
you agree
What's that
to this
called?
day? Can you agree to this day?
You described an environment. What's that thesis called?
Well, I don't know what it is. What is it? What is it called?
That concept it's called post-capitalism economics.
Okay, great. I'm happy to hear. But Ahmed, can we agree?
And it's an
Can
established
you agree?
consensus
I want to know if you can
from
agree to
people
this.
that are
I want to know if
visionaries.
you're capable of agreeing. Okay, can you agree to the
No,
fact that
I will agree.
that no quantum investor can beat Warren Buffett at this moment in time?
I will. Right now, sure.
Okay, good. Then argument's done. Good.
Within, but obviously, given a time horizon, strip the money from both of them. Give them a year. Who's winning?
Warren Buffett.
No, he's not.
Bro,
66%.
it would
66% a year is larger than 30%.
But you also have to understand, Warren Buffett in Berkshire Hathaway. No, and you know what? That's actually a stupidity on my point. Yeah, yes, I would agree. I would agree with you. I changed my answer. I would change my answer after what you said.
You know what?
I do. I would change my answer. It's true. If 1 year, yes, 1 year is not going to win. But over a decade, if you tell me over a decade, I'll tell you guaranteed Warren Buffett's going to beat him.
10 years?
Yeah, guaranteed.
Okay, depending on the. Yeah, and if you were to go back in history and then repeat the next 10 years,
no,
you'd win.
No, 10
but
years.
You're going,
bro,
you're going 10 years.
You know how? Can I tell you something?
What's more
What's
a more resilient indicator?
Listen. I'm going to tell you the resilience.
Can you stand the test of time?
Do you want to know why I love Warren Buffett?
Test of time.
How many times have you said AI is a bubble? How many times have you said AI is a bubble?
He didn't buy Bitcoin.
No, exactly. Hey, you said AI is a bubble. You know Warren Buffett has not put any amount of money into any AI startup. They only buy fundamental companies. Why? You're telling me you're worried about a crash. You think everything is going to correct. Warren Buffett is the guy with $300 billion on the sideline waiting because he's already thought this through.
Yeah, he plays it very safe.
He plays it not safe. He plays it value. But
all
right, we're gonna listen. We're at 47 minutes. We have to end the pod. But this was a fantastic conversation. This was a fantastic conversation. So great job. So have a great rest of your day, guys. I hope you learned something from this. Remembrance Day.
Leave comments, please. Let us know
if you can get us into the Renaissance Fund, which is Ben Simmons' fund, the 66% a year. Please let us know. Please. All right. Outside
of here for Berkshire Hathaway before the guy dips.
The guy dipped in December, but it's too late for us. All right. Have a great rest of your day, guys. Bye bye.